in terms of what I would like to share with everyone, my role within the investment space, I've been a broker. I am a broker at our brokerage. We've got about 80 realtors in our office, and I came up through investment real estate, much in the same way that James has done. So, I own a great little tidy portfolio here in Calgary. Most of my work has been in a broker and agent capacity, helping investors run deals for themselves and helping them figure out their investment strategy for themselves within the Calgary market. What communities work best? Do I buy new? Do I buy used? Where should I be purchasing? Is it worth a premium for this location to get less cash flow, to have more land, all that sort of stuff? And so that's what I wanted to be able to quickly just run everybody through here today. I had a presentation, James, but it was kind of more deal analysis like the one that you've got. And so what I'll do instead is just sort of give you my high level filter that I like to run clients through when I've had a strategy session with them and we've talked about what is the right fit for what type of property do you want to get to, and then how I can help take clients where you might have a scope like this of so many different property types and areas, and then you really can dial down into where you should be investing to not only make a great return, but the property should also complement your skill sets in terms of an asset manager, right? We talk about property management, but asset management is managing the property itself, and also stuff like the budget. James has talked about having a reserve fund in there. Great stuff to have. So many investors don't do that. Have you got a reserve fund? When are you going to spend the money on it? When are you going to strategize to have your tenants move out of a property, let it sit vacant for a month, fix everything up that needs to get fixed so it can run smoothly? Your property manager is not going to do that for you. As an asset manager, you need to go and do that. So that's part of the process that I like to bring into the conversation early is, how big of a bite do you want to take as an investor? I mean, we all want to make money. We all want great passive income. We all want cash flow, but what type of property is the right type of property for you as an investor, for the joint venture partnership that you've got, and how fast you're moving. If your JV game is super good, and you've got a lot of clients in the mix, you might not want a lot of high maintenance real estate investments. You might want something that's a bit more systemized and processed. Buying new is a great fit for something like that if you're a good capital raiser, versus buying something where what you do to it can force some of that appreciation, right? So James talked about the 3 different return streams there. You can take the appreciation part of it and actually break it down into 2 segments. There's the passive appreciation that will occur in any marketplace where a rising tide will carry all boats. And that can vary within a community as well. And I'll talk about that here in a minute. But then there's also the active appreciation element. What is the investor doing from your skill set and your talent as a real estate investor and entrepreneur, where you are adding value to that property? So here in Calgary, the name of the game for the last sort of 5 to 6 years, as our bylaw has gotten to be a little bit better, like you guys in Edmonton. In Calgary, it's been about legalizing basement suites or developing basement suites and doing that the right way. So we spend a lot of time here in Calgary looking for good properties that can be developed into legal basement suites on a modest budget to allow investors to achieve that lift in value, which they can then go and refinance and either have a great little return to show to their investor or their money partner, or pocket it themselves to get their capital ready to go and buy again. So deciding for an investor for themselves, what type of investor and deal do you want to get is one of the first things that I look at. And then when an investor knows, okay, I'm down to go and be a renovator, I want to go and do this. Well, now we'll take the next step and start looking a little bit more closely at what communities and what areas can feed into that strategy to really allow the investment property that you'd end up buying to sing for you, right? And so if you're the type of investor that is going to go and put money into something, you're going to bring the team, you're going to start delegating out to your contractor, your architectural technologist, if you got to get plans together on something. if you're going to go and do all of that, then you would look for areas in the city that are gentrifying, where other people are spending money to improve their properties and turn them over, so that that particular community is going to see a lift, right? You want to be a part of that. You want to be in those areas where other investors are spending money to improve those locations and those areas. And so that's something that in Calgary, we've got a handful of communities that really lend themselves well to that. We have our inner city kind of communities, and then we work our way out into suburbs like many other major centers. But some of those communities would be in what I would call corridors of growth. So these are areas where other people, and it could be large public institutions or it can be private developers, are spending money to improve those locations. So I would go and look at the municipal plan, what's happening in Calgary, and you can do this at any market, because any major municipality will have a planning department, and they have to forecast how their city is going to grow, and they'll decide, okay, we want a highway over here, okay, we want a large commercial development or something to happen over here, so we're safe zoning for that. Here's where our arena is. Here's where we're going to plan for schools and universities and all that stuff. So you would look in those areas for where other people are spending money to have those markets increase in value. Because if you can do that, you're positioning yourself to benefit from the spin-off and the spillover rather of those major investments. So here in Calgary, to give you a bit of an example, and you guys have went through a little bit of this in Edmonton too, we have our ring road, which is just being finished now. It's been underway for about 6 to 7 years here. They've been working through this. It's just about to be completed. And there's a whole quadrant of the city that's been left without major highway access like this. It's now going to start to wake up. And it's our Southwest Ring Road goes through a First Nations land. And so the Tsuut'ina First Nation is doing an enormous development right beside the ring road that's going through their land, which is going to add a whole ton of jobs and add a whole ton of employment prospects. But what's interesting for that area is they don't want people living on their land. They're okay for people to go and spend money and consume real estate. So it's more commercial development and retail, but there's no residential. So what that means is there's a great opportunity for residential real estate investors to buy properties in those areas and add the suites to them to be able to meet that rental demand that will be coming down the pipeline. And it's all laid out there on a roadmap. And those are some of the things that we would look at a high level to sort of say, okay, where can an investor go and ply their trade with finding properties that can be converted, that can have value added to them, but do it in an area where somebody else is going to be helping to boost that passive or active appreciation for that particular market. So that's a key one that I would look at. The other part is some risk mitigation within this. So if you're looking at a community that's gentrifying, where the old becomes the new, some of the elements that are happening within there can be, you'll end up with lots of landowners that are, say, they're letting their properties rot. They're not putting any more money into them because they're into that particular investment for the land value. They want to be able to sell that property to a developer or consolidate it and develop the land. And if there's too much of that happening, if the highest and best use of the land in that area is reflective of a redevelopment option, then you're going to end up with, boarded up houses or properties in there that have just been left to earn whatever they can with no money put into them. And that might hurt your strategy in the short term. So while you're looking for the communities within the market that you've picked that are in the corridors of growth, you really need to be mindful of some of the localized pockets there that can be, highly valuable for redevelopment, but not within the same, not ready to help support the type of tenant demographic that you want to attract into your property. So being mindful of that is super important too. So we talked a little bit about, the concept of corridors of growth. We talked a little bit about, the gentrification and that type of thing. And the last item that I wanted to kind of go through within all of this is, making sure that the property that you're buying, and when you're buying it, works for where you are within your investing career, right? And so not getting too far ahead of yourself within something, but also providing that, the property that you're getting is going to be delivering you the returns when you want to get them. And so what I mean by that is, if you're buying something that's older, that's going to need some work one day. And I've been in this position here now for about 3 years on an assembly parcel that my partner and I own, where the clock kind of ran out on us with this property, where we wanted to put it together to be an assembly to sell it off to a large developer, but we started to need to put some money into this place if we were going to keep it habitable, or we had to decide to just not board it up and not have anybody in there. And so we had to go through this with our joint venture partner to make sure that they were on board with us for that particular deal, and they understood the merits of it. But the takeaway there is, when you're taking on an investment property within a specific community that's gentrifying and you're doing work to it, make sure that the work that you're doing to it is consistent with your ownership time frame. If you overdo it and you put way too much money in, you'll never get it all back, by the time it comes for you to sell it and move it on. But if you don't put enough into it, it can leave you in a position where you'll end up like me, where you can't earn any income from it without putting a bunch more money into it, only to have it torn down or something later on. So a few high level items, that's what I like to look at. Once you found opportunities within that work for you and deals that work for your strategy within those areas, be it a new property at the perimeter of the city. We have those here in Calgary. That's where the really hardcore cash flow investors are investing right now, where there's little to no active appreciation elements, but the cash flow numbers are really strong. Or if you're inner city and you want to force some of the value yourself by doing a lot of work to properties in order to improve the quality of it and force some of that active appreciation, whatever way that it is that you're choosing to go about that. You want to be sure that it's aligned with your overall high level philosophy. You're not biting off more than you can chew, and that you're able to then put into practice tools like the ones that James had showed with us at the beginning, where he's got a spreadsheet. Okay, I found my community, I found my area. Now I need to go and actually crunch the numbers on this, and that you've passed that property through all of those different filters for yourself to be sure that this is a genuine deal that works for me. I like the strategy, all of the high level real estate elements to it work for me. Now I need to run it through my deal analyzer to have the confidence that it's actually going to work for me, and work for my investment, my team and my partnerships plan. One other element that I forgot to say before when looking at this is, when I'm looking at a high level deal, the financing structure. So James did a really great job of breaking down the rates and some of the differences on the rates and all of that. But as is often the case when you're buying, investment property, particularly if it's a resale deal, you're going to need different stages of financing. You may be looking at a renovation that could be up to 50% of the down payment amount that you've put into it. And so if that is the case, you're going to want to have a loan product in there that you can then go and refinance. So I will often do 2 stages of analysis, an initial acquisition budget, where here's a property right now, and here's what I'm doing to it. And then a post refinance set of numbers on it, so that you can access some of the working capital that you might have had to put into a deal in order to get that back. And now you're looking at that after repaired value or after repaired rental economics for that particular deal that you can now run with for that long-term cash flow play to take advantage of some of those, the benefits of the long-term amortization that James had keyed in on as well. So one of the things that I like to do, the spreadsheets are good for a quick analysis, but if you really like a deal, you got to take it a little bit deeper. You have to plan for that rehab part of it, and that BRRRR method, buy, renovate, refinance, rent, that's in there. You see that quite often. And I just think it's so important to make sure that you're planning for that sort of 2-stage financing part within it. So high level, find the corridors of growth within your city, wherever it is that you're choosing to invest. There will be areas where public groups or private groups will be spending money. Roads, universities, hospitals just keep growing forever. Those are good ones to look at. And then private developments, these large shopping malls, and even as crazy as retail is right now, they seem to keep growing all the time and expanding and redeveloping. And I'm sure we'll see that industry change itself up here too, to draw more people over to them. So finding the corridors of growth that are within it, and then deciding for yourself, how does your skill set best work for real estate investing, and then finding deals to be in support of that particular strategy. And then when you get there, you've now found your strategy, you've got your community, you know what you're looking at, you can come back to the analyzing tools that you've got, where someone like James has put together his spreadsheet, or one of the other ones that are out there. As long as you trust it and you know that it works, you can run it through that and be left with hopefully a really good deal that you're excited about. One final thing before I finish up is, after you've done all that, after you've gone through everything, you've got your strategy, your location, you've got your deal, the numbers all look really good, ask a buddy, ask another real estate investor for a sanity check on your purchase before you go ahead and dive into it and spend a ton of time, effort, money on due diligence. One of the benefits of sort of this new economy now and Zoom presentations like this is, you can jump in, you can screen share something, show another investor, one of your peers, the deal that you're looking at, why you like it, and hopefully they will tell you if you've talked yourself into a deal, that perhaps you shouldn't be in, or if you're on the right track, they will just pump your tires all that more and motivate you to keep going. And the Mogul group is really great for this. Any of these investment groups are really good like that. And if you've been in the business for long enough, you'll develop relationships with your peers, and you may be asked to provide one of these sort of real estate sanity checks at some point in the future, and always a great thing to honor. So that's what I have to say about high level analysis. If you've got any questions about this, feel free to reach out to me at any time. I love doing this stuff. If you want a sanity check on a deal, you can hit me up with that too. James, I know, was really great with that as well. So thanks very much, James, for having me.